Welcome to Talk Tickers, where we break down the earnings calls that move markets. Today, we're digging into Assurant's stellar second quarter. And honestly, the best place to start is just by looking at how the market reacted.
And wow, what a reaction. On August 6th, the stock just exploded higher, up over 11%. A pop like that on big volume, that's Wall Street saying, okay, we were not expecting results this good.
So what's behind that huge jump? Well, it's the classic beat and raise. And we're not talking about just squeaking by. This is the kind of blowout report that sends analysts scrambling back to their spreadsheets to redo their entire forecast for the year.
All right, let's break down the numbers. Adjusted earnings per share came in at $5.10. The street was looking for something around $4.45. So yeah, they absolutely blew past that by 65 cents. Revenue, same story, a solid beat, growing 8% year over year. Just a clean sweep on the headline numbers.
So where's all this strength coming from? Well, it's not just one thing. Assurant basically has these two big engines of growth. And right now, both of them are firing on all cylinders.
So you've got global housing on one side, where EBITDAGE has surged an incredible 33%. And what's really interesting here is that a tough insurance market is actually good for them. It pushes more customers over to their lender-placed policies. Then you've got global lifestyle posting really solid 6% growth, and that's all about their mobile business.
And let's talk about that mobile business for a sec, because it is an absolute beast. I mean, we're talking about 65 million mobile devices protected around the world. 65 million! And they're still growing fast. They've added another 2.4 million in just the last year. That's some serious, sustained momentum.
Okay, but here's the thing. The story here is way bigger than just one good quarter. What's really happening, and I think the market is just starting to catch on, is that Assurant is fundamentally changing. They're not just a specialty insurer anymore. They're becoming this tech-powered, all-in-one protection platform.
And hey, don't just take my word for it. The CEO, Keith Dimmings, was all over this on the call. He made it super clear that their big investments in tech and AI, well, that's their secret sauce. That's what sets them apart. And it's not just talk. Let's look at how this actually works.
So a huge piece of this strategy is something they call the circular devices thesis. Think about it. It's brilliant. They don't just sell you insurance for your phone and call it a day. Nope. They manage the entire life cycle, from protecting it when it's new, to repairing it if you drop it, to handling the trade-in, and then they even refurbish it and sell it again. It's this complete self-reinforcing loop.
And again, this is happening right now. Look at their new partnership with Plug. You know, that direct-to-consumer platform for certified pre-owned phones. It's a perfect fit. It just plugs right into their ecosystem, giving them even more access to the used device market. Super smart.
All right, so you've got this amazing performance, you've got this really clear strategy playing out, so it's no surprise management came out feeling super confident. They didn't just beat. Remember, they raised their guidance for the full year. So check this out. They're now guiding for full year 2025 adjusted EPS growth to be approaching 10%. And you got to remember, at the start of the year, they were just saying modest growth. Going from modest to almost double digits is, well, it's a massive vote of confidence from the top. And they're not just talking a big game. They're backing it up with cash. They're speeding up their share buybacks, now saying they'll hit the top end of their range. We're talking up to $300 million in stock this year. That tells you they think their stock is cheap. Okay, so let's pull this all together. We've looked at the numbers, the strategy, the guidance. So what's our take? What's the call on Assurant from here? And what should you really be keeping an eye on?
For us, it's a clear outperform. You just can't ignore it. You've got a clean beat and raise, you've got momentum in both of their big businesses, and you have this really compelling strategic shift into a tech platform. It all points to a bullish view.
So, what are the key things to watch? Well, for catalysts, keep an eye on how fast they're buying back stock, and for any new partnerships in that connected living space. As for risks, it's the same story it always is for this kind of business. Hurricane season. A bad one in Q3 or Q4 could really hit their housing segment hard.
All right, let's get to a potential trade idea. You know, the really interesting thing here is the tension in the story. Is Assurant an insurer, or is it a tech platform?
The market is trying to figure that out, and that kind of identity crisis almost never resolves quietly. It usually means we're in for some big price swings.
So for someone comfortable with options, this kind of setup screams volatility play. You could look at something like a long strangle. Basically, it's a strategy where you're not betting if the stock goes up or down, you're just betting that it makes a big move in either direction.
Here's how it works. You buy a call option, and that's your ticket to the upside. That's your bet that the market finally sees the tech story and re-rates the stock higher. But you also buy a put option. That's your insurance policy, your hedge against the nasty hurricane season or if the tech story just falls flat. So you profit from the magnitude of the next move. And that's really the big question for next quarter, isn't it? Will Wall Street finally start valuing Assurant like a tech company, or will old habits die hard?
And finally, a quick reminder, this is not financial advice. Options trading in particular carries substantial risk, and it's definitely not for everyone. So please, be sure to talk with a qualified professional before making any investment decisions.